Good evening, guys. JR with Secure Metals Exchange, bringing you a late night edition of technical analysis for both gold and silver for today, Tuesday, September the 4th, 2012. So, looking at the metals here on the daily chart, the metals really have been on a rampage here. The rally started roughly on the 15th of August. Let's see here, roughly on the 15th of August, and it is the 4th of September, and we still have not found a ceiling yet here for the metals. Now, looking at the daily time frame, we never managed to create a new low. You got to remember, on the first dip on the 26th of September of last year, that was a price of 1530. Let's see here, the low was roughly 1532. The new low back in December of last year, December 29th, was 1622, so about $10 difference. And you got to remember, this is a long-term chart, so anytime you see a $10 difference, that's not necessarily doesn't necessarily count as a new low, but at the end of the day, it does. The great thing is that we managed to not create another low. So had we respected this line here, then chances are that we would have seen a price of at least 1508. Now we're starting to get to the high level here, and this is where I would expect the metals to start coming back down before they continue to go higher. Now, as of right now, the question is, how much higher can gold go within this range here, within this rally? So if we look at the stochastics, excuse me, if we look at the stochastics are really oversold. Right now we're at 90% right here. 90%. And right now, if we look at the daily chart is really forming a what's called a bullish flag. So you got this flag coming. You have this huge candle here. That was back on the 31st. That was on Friday. This was when Bernanke announced his. Well, actually, Bernanke didn't really announce anything. All he said was that they are still ready to pull the trigger on quantitative easing, and it seems like most of the Fed members are leaning towards quantitative easing. So on the 31st, we saw a rally. We saw a little bit of indecision between yesterday and between today and yesterday. Yesterday being Labor Day, so I guess it doesn't really count that much. The market was closed for half the day. But my point is that we've managed to make a bull flag. So the question is this flag going to hold? If it does, then we would expect the next level to be roughly around 1620. I'm sorry, 1720. That'll be the next level of resistance before coming back down, maybe 1700, and continuing to go higher. If this bull flag does not hold, and we see a move down to the bottom, then we would probably look at around 1675, 1677 as a level of support. If we don't find it there, then we might find it here. Actually, let me draw this line here. So this is where we might find it here. So as you can see, we broke through this level here back on the 23rd. Came back down, tested again, remember, when you have a line and this line is resistance, once you break that line now becomes support, and that's exactly what happened. We broke through it, support held. This was the new support. This was resistance, now turned support, with the help of the 200-day moving average, as well as the 20-day moving average, as well as this small short-term tunnel that we were trading through. We managed to find support here, and then a rally. Again, it doesn't seem like it's going to stop anytime soon. I did get a little worried today because I didn't see the $1,700 prices. I really expected to see $1,700 today, especially after the negative data here for the US dollar, but that wasn't the case. As of right now, stochastics are kind of getting a bit tired. They might be, it looks like they're starting to turn down to the downside here. If that's the case, then we could see this come back down over here before it continues to go higher. I would probably say that again, the metals will probably come down to 1675. If this doesn't hold, then we would look for the 20-day moving average to hold, as well as these excuse me, these lines here should hold up at around 1650. Okay, I think the again, as far as the moving averages, we're above all moving averages as of right now. 220-day, 50-day, and 100-day moving average. That's definitely very positive for us. And I drew this line here just a few minutes ago. 1720, very, very, very important number here for us. I'll tell you why. Number one, if we do a Fibonacci extension from the high to the low, from the all-time high, which is 1921, to the bottom, which is 1522, you're going to come across your 50% Fibonacci here at around 1721. Okay, so that's going to be a really good level of resistance. So it could be that this bull flag will come up to 17 to test this high of 1720 before testing back 1775 maybe, or maybe this area before continuing its leg up. Okay, if we look at the weekly time frame, again, I don't necessarily like this chart too much because there is a bearish divergence here. If we look at this, this line is going down, this line is going up. That's a bearish divergence. Again, I would expect every dip to be very, very well supported. If this bearish divergence works out, then chances are we could see a test back down to 1650, possibly even 1630, 1625, around this price range. But again, I would expect every dip to be very well supported. So it could be the case where we come back and test this level here from here to here, and then we continue to go higher. But again, usually the technicals don't necessarily play out all that well when the fundamentals are so strong, and it looks like we are currently pricing in quantitative easing. It looks like all the federal members, or the FOMC members, it does seem that they are leaning towards quantitative easing. So if I look at this silver chart here, this is the daily silver chart going through the same pattern. If we would see a break in the stochastics, if you notice, the stochastics have been holding on within this range here. If we break this line here, then there could be a move to the downside back down to $30, maybe even $30, and maybe 30.50, or back down even to 30. I can't imagine that we're going to go down further than that. Really nothing pointing at it. Again, I would say a move down back here, it's because, again, the Dow is just tanking and people are taking profits. I'm sorry, the Dow is tanking and people are attending to their margins. But again, not a market where you want to get too aggressive, but definitely a market where you don't want to miss. This is definitely a market where you want to continue to buy. And again, ultimately, I mean, we're long-term traders here. We do have some short-term. We've been lucky, and we've been able to capitalize on most of these moves here. Especially on Friday, we did pretty well here. We took some profits a bit prematurely, but again, at the end of the day, every positive trade to me is a good trade. Okay, but who knows? We might be able to take this up a little bit higher. Let's just see how the next few days play out. But as far as silver goes, silver, same kind of trend. We have a bearish divergence as well. This is going down, this is going up. I would expect to find a little bit of resistance around 33. Maybe around this level, 33. The 100-day moving average is roughly at 32.60. And again, a bearish divergence on the weekly chart. The positive thing about this weekly chart divergence is that anytime you have these long-term divergences, they might take a little bit of time. And a lot of times, again, with the fundamentals so strong, it could be where we don't necessarily consolidate all the way back down to 30. It could be where we just take a little bit of a breather, consolidate, do a little bit of sideways trading before continuing to go higher. But at this point, it's really a matter of just allowing the market to do what it's going to do. We have elections, a lot of volatility. I do expect a lot of volatility within the next couple of weeks, but again, not necessarily a time where you want to go crazy and go leverage, but definitely a time where you can get in long term and wait 6, 7 months. I would probably say no less than 6 to 10 months, and you should have yourself some nice profits, especially with the fiscal cliff coming in at the end of this year. and so many other fundamentals. I mean, the euro is practically on the verge of extinction here, and Fed action is definitely needed. So once they do announce quantitative easing, I do expect these metals to continue to its rally. All right. So besides that, guys, I also wanted to point out here a Fibonacci level where you have to be very careful of. I'm gonna delete this here. So if we look at this, this would probably be another level for our short-term positions. This is probably a level where you want to start taking profits around the 1750. I don't normally like to wait for the actual targets. Let's say this, if we're looking at this chart, your target will probably be just below 1770. I usually like to take profits before these prices hit these lines, because sometimes they might fake you out, kind of like here. If you were shorting gold and you expected it to hit this line here at around 1508, you probably got psyched out, and now look what happens. You're back all the way to 1700. So again, within the medium term, I do expect a little bit of a pullback, maybe not too much of a pullback. I do expect all pullbacks to be fairly well supported. But besides that, we have a little bit of a bullish flag. We might be able to take advantage of that on the short term and take it up to at least 1710, 1715, possibly 1720. Again, another Fibonacci that I didn't show you here, coming from the most recent high, which was back in the high of February. Right now we're trading at a 61% Fibonacci. Remember, the last Fibonacci that I did was coming from here to here, and that's why we have this level of 1723, fairly important level here of 1720. So you have that, as well as this right here. I'll show you this line here. This kind of puts things in a little bit more of easier way to look at this. If you look at this line here, we have support around 1750, and remember that this level here was taken out back in August of 2011. This level really served as support for quite some time, and then back in September of 2011, this level broke, and both attempts that we've made to go above this line, 1750, 1720, 1730, 1720, 1750 and 1730, I'm sorry. Both times we've made an attempt to go over these levels, we haven't managed to do so. We've managed to break up, but then immediately come right back down. So we're hoping that this time around we can see a move around this level, have a little bit of consolidation, maybe come back down to 60% Fibonacci before continuing to go higher. But again, the fundamentals are in place, guys. Fundamentals are obviously stronger than the technicals. When the metals rally, they rally. I would not short this market. That's my opinion. You definitely don't want to get in front of a moving bus. But with that said, I think plenty of opportunity here to make a good money. Be careful out there. A lot of volatility. We still have the elections coming up, and we still have quantitative easing. We still have an announcement of quantitative easing. As of right now, everything is speculation, but I think it's pretty safe to say that quantitative easing will be coming here, coming soon to a theater near you. All right, guys, enjoy the rest of your night, and good night. Bye-bye.